Tuesday, December 5th, market analysis, Stan Ehrlich. Well, we have a little bit of a dip this morning, a couple of points on the spider and the E-mini, etc., and a recovery to a slight bit higher on the day. Again, the spider, the E-mini, but now we're back down again slightly, just slightly. But look at the charts closely. In the last 10 days, 2 full weeks, we have not closed or even been below the 45.43 level on the E-mini Christmas futures contract, which we're going to roll over into the March soon. But a support area formed, and we're not that far from it. Today's low is almost equal to yesterday's low, and the lowest in the last 3 days, including today, 2 previous days. My point is, this could collapse very quickly. If we start to see new lows for the day, today so far, it's going to come very close to, and let's see, we're now out of overbought. That's one good thing. Come close to a downside breakout, hitting a lot of sell stops, probably 2 weeks worth, and produce the beginning, as I've been talking about for 2 weeks now, even earlier than that, of a move down to the Santa Claus rally, which I am going to show you some great Santa Claus rally charts later on. There's one of them. Okay, so going back to our E-mini, and I am expecting a move down to approximately 44.32. Right in that ballpark area. Next chart is the spider itself. The same commentary, extremely accurate. Important level is very close to today's lows, and momentarily we're sinking a little bit. It won't take much to drop it over the edge here, so to speak. And then I'm looking for it to move down at a very bare minimum to close this gap in the spider at 441. 441.40, we'll say. 441.5. Now, it's definitely possible it could slip a little bit more. A 50% retracement, eyeballing it, would be in the area of 436. Maybe I'll put that fib retracement tool up on the screen later. Now, after that, and that should be, I hope to be, just before Christmas. It'd be great to see it the 3 business days before Christmas, and I'll explain why. Next chart. Spider 1 minute, and we're dipping down a little bit this morning. Okay, we've been spiking down a couple of times since the opening lower levels, and then a low, a bounce back, but didn't go anywhere, and here we are starting to sink a little bit again. You notice all these lows are relatively close to each other, and this is a 1 minute chart, the most I can compact onto one screen at one time. Next chart, DIA, a bit of a different story. Now, we blew into new high ground. For 2 days, it was much stronger than any other index. In fact, it was up substantially one day when we were totally down in some of the other indexes the same day. Very unusual. Something must have happened with 1, 2, or 3 of the 30 stocks that make it up. So there's a small gap to close down here. That's my first objective in the DIA on the retracement. We're overbought. Deserve a retracement. Maybe it started yesterday. It looks like it so far. But I want to see new lows, and hopefully today for the day. And that'll be new lows for the last couple days. DIA down to 356 1/3 at least, and very possibly closing this gap down here at 344. But that's a stretch. Next, Russell 2000. I think it's going to come back to the support area 179. Today's its first day down, and pretty good, almost at the low of the day right now, making new lows maybe, and could be getting very quickly here below yesterday's low in any minute. Next chart, the QQQ has already led the way down, started down 5 days ago, and yesterday hit its lowest low, actually closing a little bit of its highest gap And today bouncing back up, relatively well. We're still down 72 though. And if we have an outside down day, a bearish engulfing candlestick, we are going to get a red ER major sell signal, but that's only if it gets below yesterday's lows today. Next, the NASDAQ futures December Christmas contract around unchanged, should be a little bit lower shortly, and it has, like the QQQ, started its way down. Hey, let's go look at futures. Interesting situations. I told you yesterday about the gold and the silver and the platinum. Tierra del Fuego, heading south. Orange juice, another one that's gone in my favor really, really quickly and nicely from major signals. All right, E-mini, different perspective. We're in that resistance area, topped out before in September, the lows for a couple of weeks. During the topping out formation in July, had some support at the same levels. That's support and resistance levels. But we did get, of course, a bearish engulfing ER sell signal on the top. When you see a red vertical bar, that's a sell signal. When you see it green, that's a buy signal. Doesn't tell you how long or how high or low you're going to go, but it's a turning point, we hope, expect, and we have seen many times. Next chart, NASDAQ. No signal on top that worked. We got one red signal, but it didn't work. The next day we were stopped out with a small loss, but we're now in new low ground as of yesterday for the previous 9 days and staying basically the same. So I think it's going to start slipping again. Next chart. And by the way, that NASDAQ chart looks a little like a broad double top formation. The highs that we have seen back in July and recently are almost identical, and they're both overbought. And they both contained red ER sell signals too, right there, and two of them back to back, although unfortunately, they weren't the highest highs. Next chart. Bonds continue to be strong. They are now at the resistance area I told you was my first objective. And from this point on, there are a variety of reasons and levels at which this market could stop rallying. If it does it very quickly, it could help the other stock indexes work lower. Now, I love what we're doing because we're still long from the bottom of the market. We're long on an ER3 purchase 2 days after the bottom, which is a green bullish ER buy signal. We were short from almost the top of the market on an ER sell signal. That was a huge profitable trade over an extended period of time, several months. Normally, our trades don't last that long. Maybe I made some adjustments in the trailing stop to try to write it down like we ended up being able to do. Now, we're long from the bottom. We're gaining momentum, but that means we're extremely close to being overbought. We could get overbought today. So I think today's Tuesday that we're going to top out this week in bonds and notes and start to slip back down again, where I can't rule out 123.10, but I think that's a bit of a stretch. But remember, the last part of big, strong rallies is frequently a blow off top, meaning a very strong, fast, quick day or even hour or something. Next chart, 10-year notes. Same story. We're long at almost the exact low of the move. We're still holding a long position, and current quotes right there in resistance already. Not quite as close to being overbought, but close. So I would not be surprised to see the notes start to pull back down very quickly. Basically the same comments I've had on the bonds. We're in resistance area now for notes. Next stop on the upside could be 111.24, and I would say 113.03 for another one. Hey, remember my minimum upside objective on the head and shoulder bottom that has been working just perfectly is 112.24. So, well, why not? Next chart. Crude oil, trying to hold, not doing the best job so far, but succeeding today in a support area, close to oversold. There's a chance this could be turning around, making a little double bottom. It's too soon to tell. I can't come up with that reason for a rally. So I'm neutral to bearish, looking for new lows here. I think it's going to slip on down into this trading range support area down to 66.80. Next chart, natural gas. I want to get to the Santa Claus rally at the end of this, by the way. So show you some very significant detail that I will also be going into in more degree in the next couple of weeks, just a few days before Christmas. Natural gas, this chart, oversold. Maybe the rally is starting today. Wouldn't surprise me. I've been talking about a rally beginning. I think it's going to come back up to 3.065 or higher. The really good resistance seems to be about 3.2. Next chart, heating oil. Also trying to hang in there, support is concerned, and at the bottom in this case of a support area. So this is a little bit of a last vestige of support. If you start dropping below the red dashed line, which is the bottom of a downward slanting wedge or pennant, same thing basically, you could free fall down to a couple other support areas, which is not out of the question, but we are kind of close to oversold. And if we dribble off to the line, we may be oversold, which would be a perfect reason for it to bounce right back up to the top of the wedge or pennant again. But we're getting squeezed. This thing is coming close to its end in a few weeks, and we have to break out up or down. Historically, by the way, they tend to channels, well, okay, wedges and pennants and stuff, about 2/3 the way toward the tip. They break out up or down more often than not. Next, gold. I screamed bloody murder yesterday about gold and silver. I'm going to do it again. That is one of these, and you'll see silver in a moment, is one of the best, biggest, hugest sell signals I've seen in a long time. It brings back memories of the wheat market at the beginning of the war, which we got the top of the wheat market to the exact day. So I don't think that's going to be that profound for gold. I hope not, and silver. But I can't help but tell you that that is a whopper. And I'm keep looking for bad data and I don't find any. So you got to believe it's all true. By the way, if you didn't think of it, you could draw a very short-term chart all the way down to a tick chart to verify that this market tick for a short while, probably a matter of minutes to maybe a very, an hour or less, did get that high. That's the way to verify bad data. Next, silver, same thing. Well, on gold, how low are we going to go? Well, the bottom of this support area could give us reason for a bounce back up, so we can get an ER3 trade in the next few days. But ER1 got short around yesterday, relatively close to 2050. That's about where we're short from. Yep. And 2036 is not fantastic yet. In fact, we were a little bit of a loss at one point this morning. I'm looking for a move down to 1955 and maybe down to 1933. Next, silver, same gigantic, huge at resistance, previous historical support and resistance areas. I kind of should raise this up a little bit to about there, because you're clipping off these highs, some lows in here, and still within reason over there. It's kind of a resistance in the middle of the resistance zone. Anyway, I'm looking for a move down to 22.7, 22.3, yeah, and maybe even lower. Next, platinum. Bearish engulfing, but not an official ER sell signal yesterday. Told you it probably means we're going down. We're down today, a chunk, and starting to continue the bear trend, which started back in April with a broad double top sort of. We got one of the highs, and we got the low, and we got a low, and we got a high, and we got a low. So hopefully we have another great signal soon. But right now, looking for lower levels, looking for an 820, an 842.5 approximate test soon. Next, high grade copper. Really don't have any major opinion here, frankly. Overbought caused a downside correction. Yeah, it's coming down to what I would expect to be maybe support again at 3.7. And I'm not sure after that. Next, soybeans continue to drop further into a very profound major support area. You might remember from months back that I talked about the last two high, which we got a sell signal at, that it was an extremely profound long-term top. I'm looking at a little bit sloppy, but a broad double top formation. I'll call it a broad double top. The first high was June of 22. The second high was July of 23. 1 year wide double top, basically. And if we break the lows recently of 1270, and we're at 1296, that broad double top is going to be increasingly more cemented in people's minds long term and cause more and more bearish activity. Now, we are stopped out of the long position that we bought a few weeks ago, finally, with a profit. A little disappointed in not making more, but we bought it on, and shortly thereafter, the next day, October 12th and 13th, and we got out yesterday as it dropped into the stop and through it and closed well below our exit, and today dropping even more. So we're glad we're out. Getting close to oversold, getting close to support, so maybe it'll bounce once off of 1272 or 1283, and then breaking into low ground longer term. You know, corn and wheat have already done that. Next, bean oil. Well, head and shoulder top, caught the last shoulder high with a bearish engulfing, got short, wrote it down a couple of weeks ago, about a month ago. We got stopped out with a very, very nice profit, intermediate term, and a little longer term trade. Certainly not a swing trade for a few days to a week or two. And it wasn't a scalp, which is a day trade, obviously. But we always have a scalp, a day trade, when we ever see a red or green buy or sell signal. Definitely. But the longer term trades are ER3s, and sometimes we miss. Now, we do have a version of ER1 that does the scalp during the signal day that holds the trades overnight. I'm not showing that very often. This is a ER1, by the way. Okay. And we never did get the ER3 because it missed just by a hair. That's right. I remember that. Okay. Now, support. Not very oversold, frankly. That's going to get broken. We're going to challenge 48.11, in my opinion, 48.15, and drop below 48. And if we close below 48, then we're going to see a sharp break, probably down to 40.25. Next chart, soybean meal. Out oversold, in support, bouncing today for the first day. Probably bounce back up to 420. But this is also a broad double top. Look at all the bearish comments I'm making in the grain complex. Wow, a little bit not kind of expected. So anyway, a little bounce and then another new low, probably back down to 363. Next, corn. We bought the bottom to the day, ER buy signal. 1 day up, 2 days up, 3 days up. Today is up so far. 4 days in a row. ER3, we missed by less than a cent, but we still have ER1 position trade from the day of the signal. And we are long from about 477. Don't know where the stop is at the moment, but probably in the low 80s. I should probably put that study on here for tomorrow. Next, wheat. Getting overbought. It was only a week ago that we were oversold. So, wow, that's a pretty stiff rally in a short period of time, especially for wheat recently. Maybe it'll carry up a little more, but I can't help it. This is a long-term bear market. And ever since we had the sell signal at the top, again, March 8th of 22, red ER sell signal on the high day, one of my most incredible signals in decades. So I think this rally is going to quit real soon, right around 648. And that's not much higher than today's high. Yeah, 645 and turn down. Next, live cattle needs to bounce again, maybe, and then make another new low. I can't help it. This is stair-stepping itself straight down. And the first decent area support I mentioned yesterday is holding again today. So a little rally could happen, but we're not quite oversold. That's interesting. That's a divergence, new lows in price, but not new lows in the indicator. That could amount to something shortly. Next, live hogs, back into support area, starting to dip down again. I think it's going to challenge the previous lows. Why not? This hasn't got any huge blow off type of a bottom at this point. It already broke the support level once. I think the next idea as far as support is concerned is 56.80. Of course, the low's at 65.75, but 56.80 is looking a little bit more realistic. Next chart, OJ, we got the top of the market again. Now I'm getting excited again. The last time it was on October 31st. Crash, crash, crash. Big right into oversold after 3 days earlier being overbought. Now this is taking a little bit longer. That could mean the move down will take longer and it could be bigger than the last time. We got an ER red sell signal on the high day. So on November 21st and the next day, an ER3 short, which closed with a small loss only on the first day, period, is just crashing like crazy now. It's getting oversold today. First time. Watch out. We're about to have our first decent bounce. This 1 day and a half bounce wasn't that decent. That wasn't that big a deal. Didn't lead to anything, didn't matter, didn't count much. Now, in oversold condition, approaching a support area after the size of a break, yeah, we could have a decent bounce, but I'm obviously bearish intermediate to long term, maybe hugely so. Let's see what happens. Next is cocoa, overbought, dipping down a little bit. Not really sure about too much here. Honestly, I can't come up with anything particularly real interesting except for 3,770 for support. Still bullish long term. Next, coffee. Resistance has stopped it twice now, actually about 3 times. The first 2 overbought conditions. This could be an excellent short sale area. If you're wrong, your stop wants to be maybe a little above today's high and certainly above the high last Friday or the top of the resistance zone. That's the same thing. And your risk doesn't look too bad. And if we're right, it's going to start to make lows lower than yesterday's lows real soon and probably come down to 165, I would think, easily, and maybe down to 150 for coffee. Next chart, sugar. I'm looking at support trying to hold, not doing the best job in the world so far, almost low and last, new low close for the move down, close to the lowest low for the move down. The only thing it's got going is the previous oversold in the support area. Yeah, and that's good enough to bounce, but I can't tell. I'm sorry. Got to keep my mouth shut on this. Next, cotton continues to chew away at support. Long-term trend is very dull and sideways. Again, I've mentioned the possibility of it going right back up to 90 or 87, where it's been many times now for a year. we're waiting for a long-term bullish or bearish breakout here, frankly. And the bearish breakout could be the first, the one that happens, because it's not very far away. Anything closing below 75 is going to look really bad, except, of course, the chance oversold conditions, some kind of exhaustion weakness makes it look like a double bottom all of a sudden, but that doesn't seem likely. Next chart is back to the E-mini. We are now down about the same amount that we were when I started this yakety yak, and I'm about to show you the Santa Claus rally. Don't go away. Here we go. Santa Claus rally 2 years ago. Bought at the same time 3 business days before Christmas, which apparently for the years 2021 and January of 2022, Christmas was on a Saturday, I believe, because Friday was a holiday, and that should have been the 28th. The next trading day was from the 29th, I meant the 28th, and the next trading day was the 29th. Then, oops, I'm sorry, I'm jumping ahead of myself here. Just a moment. The 23rd, there we go. Thursday the 23rd, we bought early in the morning, the exact same time the day before that, and the exact same time the day before that. So what happened was, we would have liked to have bought it 2 days earlier at the same time. We would have gotten 2 of our trades off at much earlier point. But the rules we've come up with dictated what the system did, period. Now, the offsets take place early in the morning also, in the first trading day of January, the second trading day of January, and the last third of your position, the third trading day of January. And the net result, I think, was close to $3,000 for these 3 trades. And that was the Santa Claus rally trade. What you will hear in the media is you buy just before Christmas in some way, shape, or form, and I just give you significant detail, dates and approximate time of day, and I'll detail the time of day soon, and the dates on the offsets. But there's something very wrong here. There's no money market protection. There's no stop. There's no recommendation for how you get out of the trades if it goes in the wrong direction. I do not recommend that. I think that is foolhardy. People who don't use stops in some way, shape, or form immediately when they get into a trade are looking for trouble. So the traditional strategy does not have any money management. You buy them, you close your eyes, and you get out after Christmas, after New Year's. Frankly, I don't like that a damn bit, but it worked marvelously. And this is one of the best trades in the 25 years of track record that I have for you. Just a moment. And TradeStation will blow up the performance report. Here it is. We're starting in the year of 99. And was that 99? Yeah. And 3 trades, then 3 trades, then 3 trades, then 3 trades, for a total, I believe, of 72. Yes, that's correct. Divide by 3, you get the number of years. And the last couple of years, few years, have been outstanding. There have been 2 periods of time when the equity dropped, and one of them not particularly a small amount. But there have been extended periods of time when every single trade, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15-ish, were all profitable in a row. So that's about 5 years in a row. And back here, nothing but green, new high equity. And frankly, it's more than 15 if you start at the bottom. Sorry about that. So from 2017 to last year, the equity curve almost went straight up except for 1 trade. That's the history of our strategy with detail. You have a great day. Talk to you tomorrow. Thank you very much.